Welcome back to Chronica, Alex here. Most traders lose money in binary options not because they enter badly. They lose money because they are trading in a market that simply isn't suitable for binaries in the first place. And this is one of the most overlooked problems. People get taught strategies, patterns, timing, indicators, but almost nobody gets taught how to judge the market environment itself. So, in this video, we will talk about what a bad market looks like for binary options, even when the setup looks perfect, and why in these moments binary starts working against you in a very consistent way. The big idea: a market isn't just a chart and a price, it's an environment. It has liquidity, participants, speed, and a reason for price to move. Any strategy only works when the environment matches the logic behind it. And in binary options, this matters a lot because you don't have much flexibility. You can't sit through a pullback, you can't manage the position, you can't exit early. You either trade in the right environment or you don't. And there are a few environments where binaries tend to fall apart. The most dangerous one is what I called a dead market. A dead market doesn't always mean no movement. It means there is no real intent behind the movement. No side is pushing, no clear pressure, no reason for price to keep going. On the chart, it usually looks like a tight range, constant returns to the middle, little impulses that don't continue, candles with wick on both sides. In this environment, price can still move, candles can still look clean, levels can still work. But the probabilities are not friendly for binaries. Why? Because the market keeps returning to balance. So, any expiration based on continuation start losing over time. And the classic mistake here is confusing a flat range with a pause before a move. They are not the same thing. A real pause before a move usually looks like compression and build-up. A dead market is just a lack of interest. No build-up, no breakout energy, just noise. Thin liquidity. The second environment to avoid is thin liquidity. There is often late night, early Asia, the hours after the US session ends, the time between active sessions. In thin markets, price can jump, but those moves aren't supported. They flip easily. That destroys timing, and timing is everything in binaries. You will often see sudden acceleration, then sudden stopping, levels getting poked and instantly reversed, spread and tiny price change working against you. It can feel alive, but it's not alive, it's just thin. And the thin market isn't about probability, it's about randomness, the chaotic market. And the third one is chaos. This isn't flat. This isn't low liquidity. This is when there is movement and volatility, but no structure. You see it a lot, right before big news, when the market is waiting on decision, when expectations are shifting fast. Price runs both ways, breaks levels, speeds up, slows down, no clean rhythm. For binaries, this is brutal, because your expiration ends up inside pure noise. You can get the direction and still lose, just because the timing gets messy. The trap most traders fall into. Here's the important part. In a bad environment, every strategy starts looking like a bad strategy. And that's the trap. People think the problem is their entry rules, or their indicator, or their settings. So they start changing the system, when the real problem was that the market wasn't given conditions where probability could play out. That leads to endless tweaks, strategy hopping, and the feeling that nothing works. But sometimes it's not that your strategy doesn't work, it's that this market right now is not a good place for binary options. The takeaway: a grown-up trader asks one question first: is there a market here right now? Only after that do they ask, where do I enter? If the market is dead, thin or chaotic, they don't look for a setup. They don't trade. That's a huge part of what separates consistent traders from everyone else. They don't try to make money in every phase. They wait for an environment where the odds are actually on their side. In the next video, we will go one step further, and it's something almost nobody talks about: why the asset you choose in binary options can matter more than the entry point. Why some instruments behave cleaner and more predictably, and others destroy your stats even when you trade carefully. And how the same market can feel perfect for binaries and completely hostile depending on what you are trading. If you start choosing the right asset first, and only then think about entries, trading gets simpler. And a lot of these random losses disappear without adding a single new indicator. If you want that next video, subscribe so you don't miss it. And if you ever notice certain times or assets that always feel weird to trade, tell me in the comments, I read them. See you in the next video.